Hello, my name is Chris Bird, and I'd like to tell you why I think you need to come to Celabration in Texas in February of 2018. I'm going to be doing a 1-hour breakout session on the new tax law, and that is assuming that we have a new tax law by December 31st of 2017. And I've been in this business for more than 35 years, and for what I'm seeing and what I'm reading, I believe we're going to have a new tax bill. It's especially important for realtors to understand how this new tax bill is going to impact their own tax returns as well as the tax returns of many of their clients. Because this is going to be one of the most significant changes in probably 31 years. This change is so significant that when they do a change of this magnitude, they actually change the name of the Internal Revenue Code. And the last change was 1986, and this is going to be the Internal Revenue Code of 2017. Let me tell you some of the big things that are in this tax bill that are going to change the way that some people think about owning a home. First of all, the standard deduction, which right now is between $12,000 and $13,000 for a married couple, is going to double to over $24,000. What I read is that basically about 25 to 30% of all 1040s filed claim itemized deductions. And the articles I've read said when they double the standard deduction, that's going to decrease the number of people that claim itemized deductions to about 4 to 5%. Well, that's important because the number one standard deduction, the number one itemized deduction that allows somebody to claim itemized deduction is the home mortgage interest deduction. So people with lower levels of mortgage and low interest rates will probably find that the new standard deduction is going to be better than itemizing their deductions. So the issue there will be, will home ownership be as much in demand if people think that, well, the tax write-offs are not quite as great? Well, another issue is the deduction for real estate taxes. So there's going to be a cap on real estate taxes along with state and local income taxes of $10,000 per return. So people that don't have a lot of real estate taxes are not going to be much affected by this, but people that live in high-rent districts like New York, New Jersey, California, Illinois, things like this, we're going to see, I'm personally going to see my real estate taxes capped from about $14,000 down to this $10,000 number. And what we don't know about these first two items that I've talked about, Congress is talking about eliminating the mortgage interest deduction on second homes. I don't know whether that's going to be in the final tax bill today, but I'll know before February of 18. Also, there's talk about the real estate taxes on a second home will not be included in the $10,000. And again, as of today, I don't know that, but I will by February of 2018. So what else are they going to do? They are going to modify the 2 out of 5 year rule for the sale of a home so that you don't have to pay tax on the gain on the sale. They're going to modify that to a 5 out of 8 rule, meaning that people are going to have to live in their own homes longer before they qualify for the exclusion of $250,000 or $500,000. And that rule is effective for sales or exchanges of a principal residence on or after 1/1 of 18. Another provision being talked about is reducing the $250,000 or the $500,000 for higher income taxpayers who have income over $250,000 or $500,000. Again, while I don't know the finalization of that issue right now, I will know it by February of 2018. What else are they going to do? They're going to modify the 1031 real estate exchange. What I read, they're going to continue to allow it for real estate 1031s, which is really good, but they're not going to continue to allow 1031s for the exchanges of cars and trucks and things like this. So again, we need to talk about that in February. Another issue is changes to depreciation. Congress has seen fit to really raise the limits on how much people can depreciate. So I'll tell you about this as well. So I cannot tell you enough that celebration this year is going to be very, very important. I'm going to throw the best of my material into this 1-hour session. And I'm also going to be talking about changes in this new tax law to a favored entity, the S corporation. So you don't have to be an accountant to attend my session. I have a way of presenting this in a manner that will be understood by all. And I welcome you to come to Dallas in February and hear what I have to say. Thank you, and I hope to see you then.